Good morning, I'm Lauren Hayes for the Finance News Network. Stocks fell in choppy trading on Thursday as investors weighed several key earnings reports and kept an eye on the bond market where Treasury yields continue to climb. The benchmark 10-year Treasury yield reached a high of 4.24% on Thursday, trading at levels not seen since 2008. The rising Treasury yield environment is one reason that many strategists are sceptical the market can sustain a rally in the near term, even though the third quarter earnings season has been better than expected so far. The expectation is that earnings will be good enough to keep the market in a trading range, but not enough to send it back up to its recent highs. And in the UK, the economic crisis there has now become a political one, with the resignation of the Prime Minister after just 6 weeks. The Dow Jones Industrial Average slipped 0.3%, the Nasdaq shed 0.6%, while the S&P 500 dropped 0.8%. The Dow was nearly 400 points at session highs, but stocks faded as Treasury yields rose. Several strong earnings reports limited losses for the market, with AT&T and IBM rising 7.8% and 4.7% respectively, after beating estimates on the top and bottom lines for their most recent quarter. On the downside, Tesla shares dropped more than 6% after the electric vehicle maker said Wednesday evening it expects to miss its 2022 deliveries target. The company also posted a quarterly revenue that missed analysts' expectations. Another concern for Tesla shareholders is whether Musk will need to sell shares to finance his roughly $44 billion deal to buy Twitter. He's already sold about $15.5 billion this year. Across the sectors, no real leadership once again. Of note, the short interest in US energy stocks has risen to 3.9%, the highest level since October 2020, according to S&P Global Market Intelligence. That means that 3.9% of energy shares available for trading are being held by short sellers. The selling pressure across the market appears to be coming from retail investors who are piling into cash, with nearly $140 billion switched into retail money market funds so far in 2022. For retail investors, for the first time in a long time, the yields on money market funds are now yielding close to 3% and are attractive from a risk-free perspective. On the currency front, one Australian dollar is flat compared to the US dollar yesterday, buying 62.78 US cents. Now to commodities. Iron ore futures are pointing to a 1% gain. Gold lost 0.1%, silver added 1.3%, copper gained 2.3%, and oil added 0.5%. The SPI futures are pointing to a 0.4% fall. I'm Lauren Hayes. Have a great weekend.